Hey there, this is an analysis of DD, which is DuPont, a company that is older than most of us here, as we can see by it has a 20-year chart, definitely older than me. Alright, just going to do the normal analysis, see what we can do for it, or with it. First, actually, let's take a look at the 20-year. Just want to mark this level right here. This is our roughly 15-year high, 13-year, 14-year maybe. So that's going to be one's resistance level. We'll see, since that one is, like I said, about 14 years old, it might not be significant since it is pretty much dated. What else can we do? We can see that about this level right here, around $30, is a significant support level. This level right here at 45 is significant. Didn't look like it had much of a hard time getting through 50. Okay, we'll zoom in again to the 5-year chart. And here in the 5-year chart, I'll change the color of the lines I'm using. So those red ones mark the extremely long term. The black ones will signify the short, well, no, will signify just the normal long term that might go along with more of a cyclical, like 4-year movement. So we'll do our first trend line, see if this one touches anything. Extend that guy out. See, 1 touch, 2 touch, 3 touch, 4 touch, and right now it sits under it. So I would expect if the stock keeps going up, this could be a potential resistance level, since we have, and actually I'm going to draw this one too while I'm at it, but this one actually looks like it's converging. Yeah, so that one converged right there, so we can somewhat disregard it. Oh wait, take that back. It actually looks like this line right here is acting as a resistance level there, so we'll call this one resistance 1, this one resistance 2, and it looks like DuPont's having a little bit of trouble getting through resistance 2 right now, since, let's see, it's touched it once, touched it twice. And then to see if we can, if there's anything going on that's parallel to it, see if we can maybe draw a channel. What we got? 1 touch, 2 touch, 3 touch. I guess we can somewhat draw a channel right there. Still a bit of a stretch. I'm going to scrap that one. So that one we can't do a channel. This other one, can we do a channel with? Not really. I think these are just going to be significant trend lines in the end. Alright, so we have those 2 levels. I will zoom in again. Go to the 1-year chart. And things are getting a little more simple now. Yeah, sorry, I got a bit of a cold. I'm a little stuffy. So there's our next chart. Let's see if we can draw any trend lines on this guy now. And I'll change the color one more time. So to signify the intermediate term, which is what I'm doing now, anything less than a year, but not less than a month, for the intermediate term, I'll go with a nice orange. I'll draw from this low here. See if I extend this, that gives me, nope, nothing on that one. Can I make some type of channel? Does that give me anything? Not so much, but I'd still expect that one to be resistance. So right now we have a couple resistance lines. We have the resistance it's at right now, which I called R2, the resistance that it might hit if it would keep going up, which I called R1, and then we have this little orange one here, which I'm going to call R3. So we have a couple, just a few things that might have some trouble getting through. See if I can draw a parallel to that and see if I can make some sort of channel. Not really, so I'm going to scrap that one too. See if I can do anything with this line here. Extend that one, move it a little further back. Do we have a couple touches? Yes, we actually do, and this to some extent might be a little bearish, but we'll take one more line that I'm drawing. I was thinking for a second it might have been a rising wedge, but it isn't, or a broadening formation, because we see there's a breakout right there. Alright, so I'll get rid of these guys, and I will move into the 60-day chart and see what we got from this. Alright, 60-day chart, 60 minutes. Can we make any good trades off of this? Of course, see if we can draw some trend lines. And I will change the color one more time to a nice easy to see blue or purple. Is that purple? Yeah, it's kind of purple. Okay, this one looks like an easy trend line to draw, and maybe this one too, which this one might pose a little bit of trouble, because take a look at it. This formation here that formed over the last, let's see, since January 25th maybe, and now is the 6th, so over the last 10 days. This is what's called a rising wedge. So rising wedge is generally a bearish pattern, and here, this might actually come in handy. This resistance level right here, what we might see is this rising wedge formation be completed, but where would we see it completed? Here, I'll zoom in one more time. Probably as soon as it hits that level, and then after that it'll break through this bottom trend line and it'll go down a bit. Where do I think it'll go down though? This stock still is in a pretty strong uptrend, so we'll pick two fairly recent resistance levels that are now, of course, support levels. So let's see, we got 1, 2, 3, 4 touches on that. We might have a buying opportunity around $50.50, because, like I said, it's still an uptrend, and rising wedge formations are usually just they're usually just in the short term. And if it does break through that line, the next point that it could possibly hit would be $50 before going back up. Now, of course, I've been looking at this and I'm saying, alright, I'm not getting as many answers as I like, so this chart analysis isn't working too well. Like, even the oscillators, like no patterns in volume. Oscillators, we have this stochastic right here, which, of course, it may just look like a bunch of lines, but showing that we may have an overbought situation, but we don't have a sell signal until these two lines cross each other. And then in the relative strength index, which is down at the very bottom, this area, we do see that the stock has just moved into overbought territory. So I'm a little confused here, and the next thing that I would do in this case is, and I'm dating myself by using this because I usually don't, point and figure charts. And I'm sure that as soon as I post this somewhere, people are going to be like, wow, that's really old school, because these were some of the first charts that were invented on the stock exchange, but they still have their use. Alright, so I'm looking at this, you might be seeing, alright, bunch of X and O's and a bunch of 45-degree trend lines. First things first, these 45-degree trend lines, when one of them is broken, and they're usually drawn from the extreme lows of certain movements, when one of them is broken, usually pretty significant, but we don't see any that have been broken recently. The blue ones are the bullish support lines, the red ones are the bearish resistance lines. That's what they're called. Now, take a look right, and see if I can use this paint shop program. Take a look right in this area. Actually, Hang on a second, see if I can get a pencil or something. Oh well. Take a look in this area right here with that pea yellow color. See if I can use something a little different. Well, that's not much better. You get the point. This area right here, it's a congestion area within the uptrend, and as you look at the bottom here, take a look at this area at the very bottom. Yes, these are the years. So over the course of the last year, you only had this many data points, and then this is part of 2009. So point and figure charts do not have time built into the axis, so the charts tend to be a little strange. Like if there's a sideways movement for an entire year, you might see 2010 and 2011 right smack dab next to it, and then the next year far on the other side of the chart. Anyway, this pattern right here, this is called a triple top. So triple top means something different in point and figure charting than it does in standard technical analysis, while a triple top in normal charting would be called it'd be a bearish pattern, which would go up, one top, two top, three top, and then eventually break down. While a triple top in point and figure charting looks like this, and it eventually breaks to the upside, which we have seen a break. So normally the buy signal with this triple top breakout would be at $51. And we can somewhat do a measuring formula by counting the number of boxes in the most filled, I think row, row within the formation. So I'm looking at this line right here. So we have 1, 2, 3, 4, 5, 6. So we're going to take 6 boxes, project that to the upside. Okay, so 1, 2, 3, 4, 5, 6. And just bear with me a second while I make sure I'm doing the count correctly. Okay, I'm right so far. It's 6. So we have a short-term price target of $54, which I will even go to say it might be 55 because I might be counting it just a little wrong. So we already see right here 51 would be our buy signal, which kind of means that we are getting into it late. But since it's up at 54, that's our objective. We could expect seeing that when I showed you that rising wedge formation, I told you that we could expect a pullback down to $51 or $50.50. So we could put our buy down at $51 or $50.50, take advantage of the short-term fluctuations, which these kinds of charts completely filter out, and then we'll keep riding the uptrend till at least $54. So I'm hoping this helps. Don't buy yet because that formation usually is dependable, the rising wedge, so it is due for a short-term pullback, but then of course I am expecting it to go right back up. Alright, if you have any questions, post in the comment box. Thank you for watching.